overstepped its mandate by printing money to bail out struggling Eurozone governments. Well, joining us now, David Costa, who's Dean of Robert Kennedy College, is joining us from Zurich. You believe the OMT was required and is going to inject some confidence into Europe. Do you not agree that the ECB is overstepping the mark here and getting involved where it shouldn't?
Good morning. No, I don't think it is overstepping the mark. I actually think that the OMT is one of the tools that potentially is saving the euro, actually. So it's not overstepping the mandate, because among the mandate there is also the stability of the euro itself. So without euro there wouldn't be a mandate. And I really think that there isn't an overbound. There are some conditions, clear conditions on this bond buying. So it's not really an unlimited white check. So I think it was the right thing to do at the right time, probably. Otherwise we might be in a much worse situation at the moment.
Is it enough then, or what else needs to be done in addition to the OMT to solve this problem? You described it as saving the euro, but it's not saving the fundamental problems of Eurozone economies, though, is it?
Absolutely. I mean, monetary policy can only do that much. It couldn't really solve the situation of unemployment. It cannot solve the problem with competitiveness of Europe, which I think is the crucial issue here. Until we find a way for some of the European countries to become again competitive, we won't solve the problem in the long run, and it takes time. But for the immediate term, a lot of the market pessimism has really been a sort of self-fulfilling prophecy, and we have seen that already in the case of Italy, where the last auction has confirmed a very strong demand, even at much lower yields. So I think it has certainly been helpful. It is not the final solution to all the European problems, which require much more time and not just a central bank to act.
Yeah, but what's really interesting, if you take a look at the market behavior, especially with that huge tumble in yesterday's session in the U.S., Wall Street is actually essentially right back to where we were when Fed decided to embark on QE3, when the ECB decided to opt for the OMT program. So ultimately, if you think it is a risk-on kind of behavior, even with the impending fiscal cliff, is now a real super buying opportunity in the equity markets.
Well, it might not be really a super buying opportunity. You always have to be selective in those markets and really go for the sector, and particularly for the companies which are highly competitive with a global presence, even in high growth area, because essentially you're not investing, unless you're just buying government bonds, in governments, but in individual company or a group of companies. So obviously it needs to be very selective, but we are pretty much of a run-up, particularly in European finance, but across the board in the last month. So having a bit of a cool-off now is not surprising, but America has still also a lot of problems, and not just Europe. Just in Europe they are more amplified because we look at individual countries, while in America we have a big block and we look at that globally. So unemployment is certainly lower than some individual European countries, but overall we still have much of a lot of problems in America which have not been addressed, and sooner or later will come back, and that's why there is some sort of skepticism, and many of the investors are taking profit at this stage.
And you're very bullish on the role of the OMT as well, but wouldn't you agree, judging from the results of the EU summit, ultimately, can't you question how much it has done? Because the positions were clear between Germany and France, with Spain obviously coming out the big loser, and it still hasn't been able to trigger that program.
Well, obviously, in Europe, the solution is always going to be a bit convulsive. We don't have clear signals, and it takes a bit of time to get the things lined up together and actually starting. But again, in terms of market confidence, I think it was a big sign that the European Central Bank is ready to step in, and of course with conditions, so the governments have to adhere to an austerity plan and so on and so forth. But at the same time, we have this big bazooka ready, and we have certainly a solution for government to solve their problems without having to face the very, very high yields. So obviously a consensus in Europe is always very difficult to achieve, but I think it is certainly very positive given what is given, and given certainly we look at the markets now, we say we had a big tumble yesterday and so on and so forth, but without that we would certainly be in a much worse situation, particularly in a market like Spain.
Okay, David, thank you very much for that. Appreciate you coming to see us today. David Costa from Robert Kennedy College. Well, I'm afraid that